Hey, welcome back. My guest this segment is Colin Fisher. He's a portfolio manager and president of StableView Asset Management, Inc. Colin, welcome to the show.
Thanks for having me.
Colin, I guess you're in the 5th year now of what has become a bit of a staple in the technology sector in Canada. The StableView TECH18 conference is going to be this Thursday, October 4, from 9 a.m. till 5 p.m.
About that, yeah.
Okay, tell me about StableView, why you came up with the conference, and what the conference is all about.
Well, StableView is primarily an investment firm. So we have hedge fund and pooled funds, and we invest primarily, or we have a focus on the technology and knowledge-based sector. It's a lonely space in Canada, probably. So, we wanted to have some friends. So we started to throw this technology event primarily to help educate the capital markets writ large to the space. So, from simple math, if you don't want to own 10% of a company, you need 11 investors.
Right.
And so, we're trying to get more and more. We've been doing primarily institutional investors have been in the crowd. Okay. This is the first year we've opened it up to advisors in a bit more of the retail space. We think because much of the technology in Canada, because of a whole host of structural issues in the capital markets, many companies go probably a little too early, to be completely frank. And so when they go public early, they're smaller, and typically a lot of institutions have a harder time getting down into the smaller areas, and therefore retail investors have a better chance of actually getting good returns in that space, but they're also required for capital to get into that space. So that's why we'll open it up. We think it helps balance out the overall ecosystem. Okay, so are all of the exhibitors at the conference then technology companies? Yes, and so they're not exhibitors. So what we have is they just present. So we have presenting slots. This is the first year where we have attending conference companies as well. So I think we have 25, 26, maybe 30, I don't know the exact number, around 25, 26 presenting companies, and then we have, I think, around 10 attending companies right now. There's a few more that are still in the works. And so basically what those companies do, they don't present, but they take meetings, they meet with investors and whatnot. So if you think about it like TIFF, TIFF has a whole bunch of movies that go on screen, and then there's a whole bunch of business that's done in the background, and so that's sort of where the attending companies, the evolution of the concept of the attending company is there. Okay, how many companies will be there? So I think we're at 40 for the overall group, so between the presenting and the attending companies, so like I said, about 30 and about 10 some odd, so somewhere around 40 companies right now. And then in terms of attendance, I think we're north of 500 right now. I was going through the list, and it's staggering at the quality of the people that show up. Like, really? I was staggered. So we have some so last year I think we had around 350 billion in the crowd of assets under management so we have pension funds that show up, hedge funds that show up. A lot of people think, it's only open to people who do business with StableView. We invite our quote-unquote competitors, because as I said, unless you're a private equity firm who buys the whole company, you need other investors at the table. Right. And so what we're trying to do is help educate the capital markets. Generally, a Canadian investor is typically a generalist. And so, last year we had a focus on blockchain and AI, and it wasn't because it's the hot thing, it's because we want to educate people to not burn themselves on the hot thing. Right. We had some amazing panels last year on what an ICO was, how does it differ from a security, is it a security? We had artificial intelligence, the difference between computer vision, different types of neural networks. It's really so people when they get into it and hear an investment, all these words don't just sound like Charlie Brown's teachers. Yeah. So we're trying to make it a more approachable space, and also because we curate the event. So it's not just anyone who can go to the event. So it's an invitation-only event. The way we've made it sort of mass invitation is that anyone can apply, can register, and then we'll go through and we only allow sort of people that are actually either investors or truly part of the capital markets ecosystem, so that we have a quality audience for the people who are presenting and for people who are attending, that they meet like-minded people. We don't want 10,000 kids from high school.
Right.
You know?
So this is not an event that retail investors off the street can walk into.
They could, but they would have to caveat themselves. So that we typically what will happen is they'll register. If we don't know anything about them, we'll send them an email and say, can you please give us a little bit more of a description? Listen, we have a ton of high net worth investors that come as well, but you know, it just takes us an extra step to make sure that they're the person that we want to have at the event. And it's not to be snob appeals, that we only have so many seats, and we're trying to ensure that there's enough money going into that space to make sure that there's an impact for investing in quality companies and technology in Canada.
Right. Okay. So most investors in Canada right now are rather thoroughly obsessed with cannabis and cannabis stocks.
Sure.
Then you have the hardcore mining and resource audience.
Yep.
Where does technology fit into that sort of bipolar universe?
So I think there's actually quite a similarity between, and I'm going to talk more about the junior mining and exploration space. So the junior mining and exploration space is very much about stories, right? There's the closeology element. We're next to this thing and we think it's a contiguous find and yada, yada, yada. And we've got great relations with the Aboriginals and we've got great relations with the governments. And we've got, and when you listen to 50 of them, they sound literally identical. And so there's a very big similarity to that. And then you have the cannabis space, which is a story element, right? There's a lot of story to it. Is there reality behind it? 100% there's reality to it. You know, the next sort of hot, so last year, the hot space with blockchain for a while, to me that was in the mining element. There was a lot more hype than there was reality. AI, in my estimation, has more applicability and there's going to be more winners made in that space, but you really have to understand the use case. So I think the big difference is you have the cannabis and weed and mining, oil and gas, they're commodity based, right? And a lot of what is being done when you mine something or when you build out a plant or a facility is it works on the balance sheet side, right? So if you have nothing and you find a whole bunch of oil, you've got a massive balance sheet. You've gone, boom, I've got X amount of oil, I've got X amount of nickel or copper or whatnot. And so that's a balance sheet find. It's a very different trade than when you have a business. So for example, if you have a business and the business starts to accelerate, well, if you grow your revenues materially faster than your gross margin, you consume cash. It's a different type of animal because when you find something, I find a bajillion pounds of gold, ounces of gold, that doesn't do anything in your cash flow. You found it, it's a balance sheet item. So there's differences from the business perspective of how do you actually understand a business model. Now, cannabis, if you're actually producing and whatnot, has that element of mining, which is similarity. There's a big capex up front, and typically the opex is much lower, and you can get out a lot of product. But there will be the commodity similarity, i.e., if there's way too much production, you're going to have a commoditization of the product. There's going to be a compression of the margins. You're going to have a problem. And so what the way I looked at the weed space from time to time is, who is the lowest cost producer? That is no different than in the commodity space. So that's the overlap. How do you figure out the price of a commodity? It's very simple. Find the highest cost producers of production of anyone. If there's a material period of time when they start, those are the guys that are going to start dropping off. And that's where you find your cost of production, right? It's a marginal cost of production. Same thing for cannabis. We were chatting a little bit earlier. The big winners, I think, in cannabis space is going to be the ones who create a brand and a quality and an awareness that is differentiated from the production guys. And so I think those are going to be the next sort of iterations of cannabis in the whole overall space. Is that there's going to be a better understanding where they're going to be able to drive margin. Making wine or making beer, there's a higher price for higher perceived quality of beer than the lower cost production, right?
Okay, so in the resource industry, the value proposition is, we're looking for this, put your money down and we'll spin the wheel and see if we find something, you win. If we don't find anything, you lose. In the cannabis space, it's a matter of put your money down, close your eyes, and you win no matter what, at least temporarily. But in the technology space, the value proposition is so much different, and that's why I'm always intrigued by technology investors who say, I'm a technology investor, because for me, as a resource and cannabis guy, those are things I understand easily. Technologies for me are either black box, in which case the level of technical sophistication to actually understand the applicability of it is way beyond me, or it's the use of a technology to disintermediate another function in society that has previously been solved by something less technical or less sophisticated technical, in which case, okay, I can wrap my head around that. So for me, technology has always been the kind of like, no, I'm gonna stay away from that because I hate to admit I don't understand it, but if I don't, I won't go there. B, it's a much more nuanced value proposition than straight up bet over here, or we're just riding a brand new wave over here.
You know, yeah, well that's why we put this conference on, right? Is because it's actually not that complicated. It's physics works in tech, in mining, in cannabis, in what you have to understand. At some point in time, the business is doing something, and it will produce value or it won't. In the you know, it's interesting. In the case of I'll give you a reasonable concept. So, fintech writ large, right? There's this concept of fintech. It's this big monolithic concept. But when you start to parse it out, right? So you take a company like VersaPay, in whom we're large investors. They do something, so they do what's called accounts receivable automation. Bill goes out, but they do it in a way that allows them, the customer to click on it, see their bill at that point, they make a payment, it goes into the accounting, into their bank account. The bank account, they have a system then that allows it to reconcile to their accounts receivable in their accounting package, and the entire system is a closed loop like that.
Wow.
Many people talk about e-billing, but they confuse e-billing. E-billing is, I send out a bill electronically. All they're doing is replacing the paper. But I've got my paper, I got it, but now I got to pay it and do this, and there's all these things that you have to do, all these steps that you have to do, but it's not an automated system. In our day-to-day life, when was the last time you cut a check?
It's been years.
How many times has your corporation cut checks?
It almost never does, because I've been a huge fan of electronic wire transfers from a very young age.
Oh, that's fine, but that's okay. So you're replacing the paper version of the check. An electronic wire transfer is still the same methodology, and there's cost to your
I haven't even used cash in that. It's been almost 6 weeks now.
Right.
I have not touched
Just don't
cash.
go to Chinatown bakeries. I went to 2 Chinatown bakeries yesterday. I was trying to eat steamed pork buns, and they only took cash.
Right.
It was the most frustrating thing ever. When you want a steamed pork bun and you can't get it. Anyway, moving on. So, you know, the truth of the matter is that corporately, people cut checks all day, every day. But in our day-to-day life,
the primitive ones.
No. I'm telling you, checks get cut all the time.
Okay.
But you know, even my little company, we have the corporate checkbook is, you know, front and center. Like
we can't even find ours.
Well, good for you. But you know, I write my rent checks.
Right.
I write my different types of service providers. You know, for different, you know, different types of service providers. We write not an insignificant number of checks, and so. That's an issue. So you take that's accounts receivable automation. There's only 2 or 3 companies in the world that are actually doing it, because you have to tie into the ERP system. You have to have a full, you have to have a PCI compliance. You have to be able to get the banks. There's a lot of different moving parts. That's an actual fintech company. It's technology being applied to the financial. Then there's lending tech. Lending tech is, you know, at the end of the day. But they're one example, but even them, they've gotten more away from the lending component and more towards value-added services that they're doing, as a good example, right? Sure. Because at the end of the day, if my whole business process, so if I make your shirt and I drive and let's say the buttons on your shirt is less than 2% of the overall cost of your shirt, and I drive the cost of your buttons down from 1% to 0.5%, it really doesn't fundamentally do that big a deal, right? So when you look at, for example, lending tech, you get all these guys that are doing all this statistical analysis, regression analysis to figure out what you're going to default on. You know, the number one data point is for regression analysis on automating lending and underwriting. The number one thing that says you're going to pay your bills or not?
Funerals?
Whether you pay your taxes. Full stop, end discussion. It's like 95%. Once you've paid that, the additional information levels are nothing. And so they're driving down the cost of the button. It doesn't mean much.
Right.
But when something defaults, when you have that, that's why you've seen some of the companies like Scotiabank, I forget the name right now, but they bought a chatbot, an AI chatbot. And the whole concept is so that they can hunt down people with using artificial intelligence, an automated process for the recovery of people who are in default, which is where there's a fat problem, right? So part of it is understanding where does the tech get applied, how fat is that problem from a cost perspective, and how do you minimize it? And that's why, for example, with blockchain, you're going to see a whole ton of different businesses that exist right now. It's going to be in their back-end systems, and it's going to reduce error, it's going to increase accuracy, reduce back-end system costs. It's not going to be sexy.
Right.
There'll be sexy stuff at some point, but the first stuff is going to be really boring, grind, knock it out. But the application of that technology is sexy if you care about efficiency, process, and reducing of costs.
Okay, so that's an example of what we can find at StableView. If I'm a retail investor, I'm a high net worth guy, and I want to get in on this conference.
Or you're a broker, like you're an investment advisor or whatnot.
And
like
I'm hearing about this on our live stream today.
Yeah.
How do I get an invitation?
So you would go to StableView.ca, StableView.ca. I used to do pretty well in those spelling bees as a kid. So StableView.ca, and there's it should pop up, but if you have pop-ups blocked, then you see events and you can register.
Okay.
Like I said, it's a registration, then we go through the process and then we send you an invitation. So, you know, we're happy, we want to have people there. We want other portfolio managers, we want other investment firms to come out, and we do want retail. This is the first year we've actually done a push to sort of retail brokers, because we think that they're a very crucial part of the overall ecosystem. And so this is the first year we're doing a bit of a push out to them as well, and so we're happy to have them. There's no cost to attend, so that's one of the other reasons why we're a little bit more judicious as to who attends.
Sure, cool. Okay, well, we will see you there on Thursday. Colin, this has been a great introduction to StableView, and I'll look forward to seeing the conference. Thanks for joining me today.
Thanks very much.